All right, traders, I'm coming to you live. My flight is going to be boarding in about 35 minutes here. I'm going to be doing a quick lesson for you guys, just going over our new key levels, along with recapping the overall trades that were made on the SPY today. So first things first, let's start with our new key levels. Let's discuss the trading plan that we are interested in trading heading into market open tomorrow. So 459.44, major resistance on the SPY, key resistance level, previous major bull trap where SPY ended up crashing. That is going to be one of our best levels to short the SPY and buy put options. One thing I like doing is I like identifying these top wicks. This is a nice top wick with trend reversal, major resistance, major crash, major bull trap. So we're going to be very interested in buying calls towards that specific level. Now, in terms of where SPY closed, it did end up closing towards the high of this wick at $458, which was that key level that we had discussed, $458 to short the SPY and buy puts. Like I've been telling you guys, when you see the SPY retest the low of this candle right here, this is where you're going to want to short and buy puts. Notice how that same pattern formed right here, where it retested the low of this candlestick right here. This was the retest, the high of this, retested the low of this. It sold off. It sold off. Same thing just happened today. The SPY sold off on the retest right here. Same exact pattern, literally identical. You're identifying the previous support, and then you take the low of that. When it crashes, when it has a very big pullback, you wait to short it when it goes back up to the retest. That was a perfect key level and play out to short the SPY and buy put options. We had also discussed, if you listen to yesterday's video, if we have a key level, so one of our key levels for puts was 457. If it just blows through our key level, look at the pre-market highs. The pre-market highs could be another great situation to try shorting a double top. In that situation, that played out, I believe, on Thursday, and it also played out today. If you look at the pre-market highs, you had a very nice pullback from 458, very nice drop. So, if you see it's breaking out above our key level in the pre-market, don't go buying puts on the dip at 457, even if we were interested in puts at 457. Buy puts on the double top on the retest at the pre-market highs. And if you get stopped out, then you go with our next overall key level, which was 459.44. That's going to be our true best level for puts, 459.44. If we break above that with a tight stop, our next best level for puts is going to be right here. There's a gap to fill above on the SPY at 461.55, major resistance gap close reversal. So those are our key levels for puts. That's how we're planning to play puts. What you need to understand is the market is going to maintain micro bearish as long as we stay under 458.30. So if we stay under 458.15 to 457.80, you see that zone react as a resistance level. You're going to want to short SPY. You're going to want to buy put options, ride this back down to the dip. The support is going to be at 456.30 to 456.50. That's where you're locking in gains. Keep that in mind. I would be locking in gains right here at 457.20. It will try to bounce off of this previous resistance, right? So understand, we're going to see a nice little drop for the short term. If you see 457.80 to 458.15 reacting as a resistance tomorrow, buy the puts for a quick scalp. Thanks so much. That's what you're going to want to do. You're going to want to buy the puts for a quick scalp if you see that zone reacting as a resistance level. Now, what you need to understand is if we break above 458 and we're holding 457.80, we go a little bullish, and we are going to go bullish to about 459.55. That's your next level for puts. If we break above that, reacts to support. Next level for puts, 461.55. Now, let's discuss calls. What have I been telling you guys? I've been telling you to skip the morning. I've been telling you to wait for the chart to develop. If you would have done this 2 days in a row, you would have absolutely crushed it on call options. It is consistently working within this overall market. You wait for the bears to get trapped in the morning. You wait for the bears to get trapped in the morning. You look for a 30-minute bottom wick, take the low, 455. A 30-minute bottom wick, take the low, 456.50. Wait for it to go up, wait for it to go up, wait for it to crash back down. If that crash is towards the end of the day on the double bottom, on the double bottom, on the double bottom, on the triple bottom, it is going to spike. We did the same exact play that I taught you guys in the past 2 lessons. We crushed it on calls. Look at this, man. Look at what I said about calls. This was at 3:51 p.m. This is at 3:51 p.m. This was, Pacific Standard Time. This is how this is set up. Average is 6 cents on 457 calls. That was my average. The low on those calls were 2 cents. I said I'm holding till close. 9 minutes later, those calls went to 90 cents plus. They went up over 30 times from the lows. A 3,000% return if you were to get in towards the exact lows. If not, then that's a 1,500% return from my average. We did the same exact play that we discussed in yesterday's video. Wait for the bears to get trapped. Identify the bottom of the 30-minute wick. If it's towards the end of the day and it retests the low of that 30-minute wick, it's going to start to spike. It's going to start to recover. Think of the most likely outcome. We know calls have been banking after the bears get trapped and it retests the double bottom. So right here in the morning, the bears got trapped. This is the trap. You see the wicks? This is the buy zone. These are the wicks. This is where you're buying. This is the bottom wicks. You're buying on the retest. Look at how well this is working. Every single time it's retesting the low of these wicks, it is skyrocketing. And what you need to understand is they're going to do it at the very last minute. They're going to destroy calls. The theta is going to crush them. And the SPY is just going to have small little drops stopping people out. Or it's just going to be consolidating and channel chopping in the middle. But eventually, and it happens at the very, very end, this happened literally last 10 minutes since the close, it's going to skyrocket. So remember, they're always trying to scare people out. Wait for things to develop. Wait to enter. Wait for the best levels. We absolutely crush this, man. Look at my key analysis. Look at the analysis. This is all 100% real time. Look at the market commentary, man. Calls at 455 would be amazing. That's what I would consider the best price. However, 456 will likely bounce as well. When we hit to 456, we were all pounding calls. They went up over 3,000% from the exact lows. We were hitting 457 calls. They bottomed at 2 to 3 cents, and they went up all the way to 90 cents plus. That was the play of the day. The amount of DMs from people that I got who put in $500, $700, $1,000 into that specific trade, they ended up flipping that 3,000, 4,000, 5,000. I got plenty of DMs off that one specific trade alone. That was the best trade of the day. I had a couple more trades before that. I had 2 small losses on calls. And in terms of what I call a small loss, SPY literally dropped 20 cents against me. I cut my loss quickly. And then my first trade was a nice win on calls, a nice breakout. But that was the main play, man. You need to understand and have that perspective. Identify the channels, right? You identify the channels. You wait for the bears to get trapped. The bears get trapped right here at the lows. What do you want to happen? You want SPY to go up as high as it possibly can go up. The bigger the breakout, the better. Then what do you want to happen? First 30-minute red, you can try some puts for the reversal. Look at this, man. First 30-minute red, 5-day retest, it drops. The strategy is golden, man. Wait for the bears to get trapped. Wait for the first 30-minute red candle at our key resistance. Buy the puts after that, sell into the dip. Then, when we retest the lows where the bears got trapped for the double bottom, you're just buying calls. Use the 1-minute chart, use the 5-minute chart, only use the 30-minute chart to re-enter. Understand, we're buying calls when the 1-minute and 5-minute is looking a little bullish, sometimes even bearish. We just buy off the key levels. When this hit 456, man, we were all screaming calls, man. A lot of people in the chat were super bullish. I was the main one who was bullish. G-Roar was extremely bullish as well. He did SPX. God knows how much that went up. Probably, 5,000, 6,000% with SPX. Absolutely insane what you could do on that one. But that was the main play, man. And it was so simple. Bottom wick, bottom wick, bottom wick. Trend reversed on the double top retest towards the high of this wick, right? First, red bearish 30-minute, just like I did on Friday. When we retest back to the lows, to the lows, to the lows, we buy calls, we buy calls. Such an amazing strategy. Keep on doing it. We're absolutely crushing it on the call side with that specific 30-minute bottom wick strategy. Wait for the bears to get trapped. Wait for it to skyrocket. Wait for the first 30-minute red candle. Try puts at the key level. When it drops back down to the low of day, when it drops back down to the low of the 30-minute wicks, buy calls on the retest. Use the 1-minute, use the 5-minute. You can then use the 30-minute chart to confirm if it's going to continue and get back in, sell into the move, right? We absolutely crushed that play. We had several members who crushed it today and made back over, 3 times. I've seen members make back over 3 times the cost of this program. Just today alone, man, people are absolutely crushing it. Jared is one of the most consistent traders. He made over $29,000 alone. Man, if he were to stick around and buy those calls, he would have made over 6 figures today. The crazy thing is, man, with that specific trade, I sold it too soon. I only made $2,000 on that. If I were to hold that specific trade, I did the math, it would have been over a figure profit if I would have held it for just 8 more minutes, man. It was so fucking crazy. I literally made that walking the streets of New York City. But anyways, guys, my food just got here. My flight's literally boarding in 30 minutes, so I gotta head out. In terms of our levels for calls, this is what I can tell you. We're looking at 456, but our best level is 455, and we love 452.50. The reason why we love these levels, bottom wick, this is where the bears got trapped, 456. Bottom wick, 455, this is where the bears got trapped. And there's a gap to fill below at 452.50, gap close reversal. We're going to continue to absolutely crush it, guys. Make sure you're staying green. If you want to join Trader Society, this is the best time to join. We're going to be closing the program here very, very soon, end of July. It's literally about to close. It's a one-time fee. It's lifetime access. It's going to be closed. We're going to be focusing on members only. When we do decide to reopen up with the program within the next 1 to 2 months, after we're done upgrading everything and working with members on a closer basis, we're going to be raising the price over 100%. So I would encourage you to join now because it's the best time to possibly join. With that being said, I'm signing off, team, and I will keep you updated within the chat. We're going to be trading futures today. That's another thing. I'm getting into futures. I had my first futures trading session yesterday. We absolutely crushed it on the EQ. So on the ES, excuse me. So yeah, I'll keep you guys updated with that.